Hi there, welcome to My Wade Finance. Today in this video, I made you a simulation with the match of the century between 2000 and 2025. One asset will be in play, the SP 500, with three types of strategy and only one winner at the end goes. Welcome to this video. I remind you that here there is no investment advice. I show you what I do and how I do it. There you go. I set the scene. Here is the rule of the game. Starting bet in the investment 1,000 euros, a savings of 50 euros per month, and a term of 26 years. That is to say, from the year 2000 to 2025, which makes us 26 years of investment from month to month. A total invested at a rate of 50 euros per month, 16,600 euros. I have highlighted, I will put here, I have highlighted three profiles so that you can position yourself and better understand how it happens. Then you will make up your own mind. Because remember, here there is no investment advice. The first profile is what I called the robot profile. Sorry, it's the one who invests at 50 euros every month, okay? And who never looks at the prices. It's what we call the pure discipline of DCA. As you know, if you follow me, by the way, take the opportunity to subscribe if you haven't already done so, because indeed, between those who are subscribed and those who watch there is a gap. Quite important second profile. Second profile is the sniper. The sniper is the one who will store his cash, okay, and who will wait for crashes. For example, minus 20% on the market to invest at the best time. Basically, it's the one who plays on the timing. The moment is the timing. I'm going to enter the market when the market is low enough to take advantage of the rise of it. Then the third competitor in this match, the panicked, is the one who is afraid. The one who invests but sells everything as soon as his drop of minus 15 per 100, and he comes back when it's safe. But when it's safe in his head, okay, he wants to wait for the right information that says that the market has gone up and that it's finally the right time to reposition yourself on it. So what is happening over the last 20 years phase? Number one, the internet bubble that you may have experienced depending on your age. I was already present in this market. I can tell you that I was a proprietary trader at that time and that I took great pleasure for 2 years between 2000 and 2002 to positioning every day on financial assets on the internet, like the Liberty Surf. Well, I'm not going to list all the stocks of the time, but it was going up day after day, and you felt like a raging trader because every day you were actually winning. It was a bubble. Well, after we saw it, it broke down in 2003. So first phase, the internet bubble, the crash test is the market collapses from minus 45 for 100. I put you my little arrow, minus 45 for 100. Hop little arrow, minus 45 for 100. So the panicked one, they go everything at a loss. It's gone up. They go right away. Everything he knows, he crashes the sniper. He buys the exact low point. You see it here. Okay, here the panicked one sells here, but it keeps going down, and the robot, okay, it continues to buy down. You see these progressive points that lower its cost price. That's for the first 3 years old. Phase number two, the wait between 2003 and 2007. You can go and see the prices naturally on the 5 years, which are reflected today in this video because all the calculations have been done beforehand. The cost of inaction between 2003 and 2007, the market goes up very, very, very strongly. The robot is benefiting from all the rise in dividends. You can see that he continues to come in like this, certainly increases his cost price, but starts to pocket or at least have his capital to go up because he takes advantage of the previous drop. Then we have the sniper, who stores his money, his cash, sleeps at 0 per 100 while waiting for the next crisis, and yes, it sleeps at 0 per 100, except that, don't forget that making his money sleep at 0 per 100 equals inflation equals so progressive loss of his capital between two entries of phase number 3, the crash of 2008, the subprimes. Don't know if you've experienced it, if you have heard about it, and well, this is the big opportunity. The market loses less than 50 per. It's really the market. There is a breakage, a drop to go and buy companies that have been smashed. There was Lehman Brothers, a big American bank that lost all of its assets. In fact, it closed, it kicked everyone out. It actually made a huge boom because in the United States, many people have found themselves in a bad situation since their land. The retirement was placed at home. Come on, the Panicked still sells at the worst time. He's washed out. You see here, he's selling so much. He's so scared. He came home just now, but he's scared. Now the sniper is jubilant. He's investing 5 years of savings at the low point because he knows the right timing. That's it. He thinks he's the king of the world. He goes all in. Go phase number 4, the lost decade. Yes, indeed. From 2010 to 2020, it's flat calm on the SP 500. So it's not flat calm, but it doesn't work in favor of investors. It's rather flat for the CNP 500, the sniper's trap. 10 years of continuous rise, no major crash, so he stays on it. His investment is flat. The sniper waits. He waits and his money loses value in the face of inflation. As I explained to you earlier, the robot, he benefits from 10 years of uninterrupted rise. Don't forget, there is one that is out since he is waiting to be afraid, as it is a lost decade because it is flat. He does not fit into the final results in 2025. In total, they all have invested 16,600 euros. The Panicked, he has in capital at the end 24 1,000 euros, the sniper 58 1,000, and the robot with his death at 82 1,500. Come on, the robot, the one who makes the death 2 and Ben beats by chaos with more than 65 1,900 euros of net profits with his strategy. You see, it basically leaves you thinking about your strategy. Remember, you can't beat the market, to be very clear. Why the sniper lost? Well, it's cash dredged. Okay. The problem of the sniper is not that he buys, it's that he doesn't actually buy. Okay, while he was waiting for a crisis to buy cheaper, his cash lost value in the face of inflation, and he missed all the dividends of the companies that continued to be distributed. The time spent on the market beats the timing of the market. So that's valid naturally. And for long-term investments, go 3 golden rules for 2026 to set up your strategy with your decisions. Okay, is if you understand, automate all your investments to avoid psychology getting in the way. Don't trust your brain. Okay, you set up an automatic transfer for the day after your salary arrives. It will go much better. Second golden rule, don't try to beat the market. No, you are not the future trader of the whole world. You are only you in your position as an investor. And if you only wait for the right moment, well, you will miss something. Buy regularly, smooth your entry price. You have to understand it. And don't forget that even with a few euros, you can start. Basically, start small is start okay. And with 50 euros per month, as I showed you in the simulation, well, that's enough to build a huge capital thanks to the time that will play for you. So get informed, do your research to have the best possible strategy, and don't forget that on My Wade Finance, there is a master who protects your capital. Thank you for encouraging me with a thumbs up. Put me in the comments what you think of this video, and I'll see you tomorrow in a future video. Hi to you.